Welcome to the deep dive. We cut through the corporate noise to give you the insights you actually need.
That's the goal. Today we're getting into the latest from Gland Pharma.
Exactly. A major player in injectable pharmaceuticals. They just dropped their Q1 FY26 results for the quarter ending June 30th, 2025.
And it's more than just numbers on a page, wouldn't you say? There's a real story here about strategy and, well, some pretty impressive results.
Totally. So our mission here is to sift through their press releases, the investor presentation, the earnings call,
Yep, cut through the jargon.
and pull out the key takeaways, those aha moments, maybe some surprising bits, so you get a clear picture of what's really going on with Gland Pharma.
All right, let's do it.
Okay, so let's kick off with the big picture, the consolidated results. And it looks like a strong start to their year.
Definitely. Top line consolidated revenue hit $15,056 million.
Which is, what, a 7% increase year on year?
That's right, 7% YoY and 6% compared to the previous quarter. Healthy growth.
But here's the thing that really jumped out at me. The profit after tax, the PAT, it soared, and I mean soared 50%. 50% year on year.
Wow, 50%. That's huge. Up to $2,155 million.
And even 16% higher than the last quarter. I mean, what's driving that kind of jump? It's massive.
Well, it's not just the PAT. You look at EBITDA too. Earnings before interest, taxes, depreciation, and amortization.
Right, a key profitability measure.
Exactly. That was up 39% year on year, reaching $3,678 million. So it points to, it really points to better profitability across the entire business.
So the margins must be looking better.
Much better. The consolidated EBITDA margin went up by 549 basis points year on year.
Okay, 549 basis points, that's nearly a 5.5 percentage point increase, right, to 24%.
Precisely. Shows much healthier core operations. And the PT margin also improved by 405 basis points YoY, hitting 14%.
Then gross profit margin.
A very solid 65%.
Yeah.
So yeah, efficiency seems to be the story here alongside growth.
That kind of margin expansion really does speak volumes, and it sounds like management sees it the same way.
Yeah, the executive chairman, Srinivas Sadhu, called it a positive start with that revenue growth and the significant jump in profitability.
He specifically mentioned strong performance in the base business.
And the turnaround at Cenexi, which we'll definitely get into.
Right. He stressed that their strategic priorities are moving forward. Capabilities, capacity, R&D.
And the CEO, Shyamakant Giri, echoed that. He highlighted the improved margins and Cenexi achieving EBITDA break-even as proof their long-term vision is working.
So enhancing the base, investing in those differentiated products, driving efficiency.
It sounds like they're executing the plan, a clear strategic blueprint in action.
Okay, so speaking of that base business, Gland, sort of steady engine, how did that perform specifically?
It did its job. Revenue for the base business grew 3% year on year, came in at $10,409 million.
Still growing then. And profit.
Profit after tax was up 20% year on year, reaching $2,692 million.
20% PED growth on 3% revenue growth. That's efficient.
It is. And EBITDA was up 22% YoY to $3,592 million. That gives it a really robust EBITDA margin of 35%.
So what's behind that efficiency gain in the base business?
Yeah. They pointed to improved gross margins there, jumping from 53% last year to 59% this quarter.
And that was due to?
Largely favorable raw material costs for several key products, they said, plus various cost control initiatives.
Ah, so a mix of market conditions and internal efforts.
Exactly. It shows that underlying consistency and efficiency in their core operations, they're actively managing those input costs.
Okay, so the base business is solid, but like you mentioned, a lot of eyes have been on Cenexi, their big French acquisition. How's that turnaround story playing out?
It's actually quite the story this quarter. The headline news is Cenexi hit break-even on an EBITDA level.
Break-even? After all the challenges, that's significant.
It really is. It demonstrates they can integrate and, well, fix these assets. Cenexi's revenue was $48 million. That's about $4,648 million.
And the margins there?
Gross margin was 80%, very strong. And that positive EBITDA came in at $0.9 million, or around $86 million.
Okay, 86 million rupees. It's positive, which is the main thing. How did they pull off that turnaround? It can't have been easy.
No, definitely not. They talk about streamlined operations and optimized costs, which sounds straightforward, but involves a lot.
Can you give an example?
Sure. Take the Fontenay facility. They improved order shipments, cut downtime, and commissioned a new high-speed ampoule line. Plus, they got a GMP certificate from the French authorities, ANSM.
GMP. Good manufacturing practice.
Exactly, a quality stamp of approval. Meanwhile, the Hérouville facility progressed on tech transfers.
Moving production processes, right?
Yep. New tech transfer products like vaccines and ophthalmic gels actually started commercial supply. That gave revenue a boost.
And there's more capacity coming online there, too.
There is. A new pre-filled syringe line is planned for early 2026. That should substantially increase their capacity.
So it's efficiency, new tech, new products.
And the other sides, Brain Allude and Osni, kept up robust business. Brain is getting 2 new lyophilizers installed, should be qualified by year-end 2025.
Lyophilizers for freeze drying.
That's the one. Crucial for certain sensitive drugs. Management was quite explicit. This momentum comes from a strategic shift.
Shifting away from
Low-value, high-volume stuff towards higher-value offerings. Think pre-filled syringes, lyophilized vials, ophthalmic gels, and they've also managed some price increases.
That makes sense, shifting the product mix. So the strategy is working.
It certainly looks that way. Now, they do expect a slight dip in Q2 because of summer shutdowns in Europe, which is pretty standard.
Okay, understandable.
But overall, they seem confident Cenexi will keep improving. They're targeting high single-digit to low-teen EBITDA margins for the full fiscal year. Seems like they turned a corner.
That's encouraging. Okay, let's zoom out again. How did Gland perform across its different global markets? Give us the geographic snapshot.
Right. Let's start with the U.S. Revenue there was actually down slightly, by 2% year-on-year, to $7,443 million.
Down 2%. That's interesting given the strong overall picture. Why the decline?
It accounts for nearly half the business, 49%, but the decline, they explained, was mainly a timing issue.
Timing. With what?
With supplies of enoxaparin. It's a key product. Supplies were about 70 crore this quarter, whereas normally it's more like 130, 140 crore.
Yeah, I see. So if you adjust for that.
If you take that out, the U.S. market would actually have shown growth of around 11%. So the underlying business seems strong.
That context is crucial. What about new activity in the U.S., launches, filings?
They were busy. 9 new molecules launched, things like epinephrine, new strengths of vancomycin, acetaminophen bags.
Okay.
And they filed 1 ADA, that's the application for generics, and got 9 ADAs approved in the quarter.
Keeping the pipeline moving.
Definitely. They now have 372 cumulative NDA filings in the U.S. 325 are approved, 47 still pending, and they expect improvement from upcoming launches like Dalbavancin next quarter.
Okay, shifting across the pond to Europe.
A very different story in Europe. Remarkable growth, actually, up 29% year-on-year.
29%. Wow.
Reached $3,302 million, contributing 22% of the group revenue.
What drove that?
Mainly a CMS project transfer that's contract manufacturing and the launch of liraglutide in the UK.
Ah, liraglutide. That's one of those GLP-1s, right? We'll come back to that. Any other launches in Europe?
Yep. 3 new molecules, including calistamathate and micafungin, alongside liraglutide.
Okay. And the other core markets? Canada, Australia, New Zealand?
Also very impressive, grew 65% year-on-year.
65%.
Yeah. Reached $739 million, about 5% of group revenue. And liraglutide was launched in Australia, too, expanding that GLP-1 footprint.
They're certainly pushing that product. What about the rest of the world?
Row revenue was up 5% year-on-year to $2,978 million. They have ambitions there, aiming to double that business in a few years.
How?
Strategic portfolio approach, reactivating old registrations, that sort of thing.
And finally, India.
India grew 13% year-on-year to $594 million, mainly volume growth in existing products like human insulin.
Okay, so a pretty diverse geographic performance, strong overall despite that U.S. timing issue. Let's pivot to innovation, pipeline, capacity building for the future, R&D spend.
R&D expenses were $460 million. That's about 4.4% of revenue. Their strategy rests on 3 pillars: in-house research, complex products, and co-development.
How's the complex injectable pipeline looking?
Pretty good. 6 products already launched, 3 more waiting for approval. That's clearly a core part of their long-term growth plan.
And the co-development partnerships?
15 products currently in co-development. They expect commercialization to start kicking in around fiscal year 28. So it's a longer-term play, but diversifies their R&D risk.
Makes sense. They're also big on ready-to-use RTU bags, aren't they?
They are. Filed 1 new RTU infusion bag this quarter. That brings their U.S. total to 20 RTU products filed, 14 of which are already approved.
And more in development.
Another 10 are in the works. They're targeting a market they estimate at around $767 million. It's about convenience for hospitals, less prep time.
Definitely a growth area. Now, you mentioned liraglutide earlier. Let's talk GLP-1s, pens, cartridges. That seems like a massive strategic focus.
It absolutely is. A potential frontier of growth for them. They launched their first partnered GLP-1, liraglutide, last fiscal year, Q4 FY25.
And this quarter, it launched in the UK and Australia, you said.
Correct. But the really big news here is the capacity expansion.
Okay, let's unpack this. It's a hot market. What are they doing?
They are seriously scaling up, going from around 40 million units of GLP-1 pen cartridge capacity up to 140 million units.
Wow, that's more than tripling capacity.
It's a huge bet. The new 100 million unit line is expected to finish its factory acceptance test, the FAT.
That's the validation step for the equipment.
Right. That should be done by September 2025.
Yeah.
And they expect it to be ready for commercial production around March or April 2026.
And this is a CDMO line you mentioned?
Yes, Contract Development and Manufacturing Organization. So their partners provide the API, the actual drug substance.
And Gland handles the fill and finish, putting it into pens or cartridges.
Exactly. And they expect higher contribution margins from this. Why? Because of the throughput, the speed of the machines and the fill volume per batch is better than traditional vials.
More efficient production.
Precisely. And that 140 million unit capacity will be fungible.
Fungible meaning?
Meaning they can use it for both multi-dose pens and single-use pens, depending on client needs. Flexibility.
When do they expect significant volume from this new line?
Initial supply is projected around 20 million units in fiscal year 27, so starting relatively small, but they see major product recovery, likely meaning ramp up in the early 2030s. It's a long game.
Still, a major strategic investment. Any regulatory updates tied to this?
They did receive a GMP compliance certificate from the Danish Medicines Agency recently. Always good to have regulatory approval stacking up.
Absolutely. Okay, so they're clearly positioning themselves at the high value end. Let's quickly touch on financial health and operational efficiency to round things out. Cash position.
Very strong. Total cash and equivalents stood at $30,139 million.
Plenty of cushion. What about debt?
Cenexi still carries some debt, about $3,145 million, but given the turnaround, that seems quite manageable.
And cash flow from operations.
Healthy. Generated $2,620 million from operations in the quarter.
That's a good sign of underlying health.
Yeah.
Any efficiency metrics stand out?
Yeah, their average cash conversion cycle improved, down to 161 days from 172 days last year.
So they're managing receivables and payables better, turning inventory and sales into cash faster.
Essentially, yes. It indicates better working capital management.
And capital expenditure. Where's the money going?
They spent $786 million on CapEx this quarter, mostly for new projects and maintenance, a fair bit directed towards Cenexi. Understandably.
Okay. And one small note on stock options.
Right, just worth mentioning a non-cash expense of about $59 million related to employee stock options granted under their 2025 ESOP scheme. Standard stuff.
Got it. So bringing it all together, what's the strategic vision looking ahead? What's the guidance?
They're sticking to their guidance for the full fiscal year FY26, mid-teens overall growth.
Mid-teens. That's pretty ambitious. Maintains their confidence.
It does. Key priorities looking forward include, well, deepening their presence in emerging markets, not just relying on the U.S., expanding that core business geographically.
And continuing the capacity build-out.
Absolutely. Enhancing capacity, including for things like hormonal products, microsphere bulk.
Microspheres, those tiny particles for drug delivery.
Exactly. And more RTU formats. Plus, strengthening that CDMO program we talked about.
Especially in those high-value areas.
Yep. Oncology, RTU bags, ophthalmics, pre-filled syringes, and of course the big one, GLP-1s.
All underpinned by R&D and quality focus.
Sustained R&D focus, maintaining quality and cost leadership in manufacturing, that's core to their identity.
Yep.
And they're actively looking at inorganic growth too, acquisitions, especially maybe in India.
Interesting. And continuing to build customer relationships.
Adding new customers and growing share with existing partners, particularly in the U.S. It's a multi-pronged strategy, really.
Okay, so to wrap up this deep dive then, Gland Pharma's Q1 FY26 results, they really paint a picture of a company firing on, well, maybe not all cylinders yet, but certainly executing well.
Yeah, impressive financial gains,
Yeah.
driven by both that steady base business and, importantly, the significant turnaround at Cenexi.
Yeah,
The strategy seems to be paying off.
it does, which leads to a final thought.
Indeed. If you consider Gland Pharma's really aggressive expansion into these high-value injectables, the GLP-1s, the RTU bags, and you couple that with these global capacity enhancements, what does this actually mean for the wider competitive landscape, for the generic injectable market? And maybe even more broadly, how might these kinds of innovations and capacity expansions reshape access to critical medicines around the world? Something for you to think about.